If you're talking, Dale, we can't hear you.
Test, Dale. We can't hear you.
Earth to Dale. Come in, Dale. You're on mute.
Okay.
There you go.
Good ECB day.
Thank God it's Thursday.
Yeah, I know it feels like Friday.
Right.
Anyway, so ECB, I'm sure you guys are all prepped up from the flow show, and we'll get ready for it. Stelios is here. So, let's talk about where the markets are at. Let me just share this. Okay. So why don't we start with Euro? May as well. And, guys, on a day like this, one of the advantages among many is when, here, I'll log in. So we're about to have ECB today. So you go to the traffic light page, which is right here. Thank you very much. Okay, and we're online. So you have all these levels ready for you if you don't have them, or you could compare them to yours, right? You have 3 support levels. If the ECB comes up with something that takes euro down, where you could buy it, and if your tendency is to be short, you have the resistance levels right here. And of course, bull bear lines way down there. But another advantage you see is green light. So green light, you should be buying dips. Okay. So why don't I start off with Brian, expectations for ECB today?
Hey, Dale. Expectations are for a 25 pip cut,
Okay.
which will take their rate down to 2.25%. As to what we get from them, the question is going to be how are they going to react to all last week's tariff noise? The BOC, as we spoke about yesterday, they've given us pretty much a decent blueprint for all central banks moving forward, which was we haven't bothered doing forecasts because we don't know what's going to happen. So instead of doing forecasts, we're going to do 2 scenarios, one where things are not so crap and one where things are really crap, and we will adjust policy. But otherwise, maybe in 6 months' time, we can get back to forecasting again. So I think
that's kind of like what Paul said.
Exactly. He said pretty much the same thing as well. So
hey, by the way, I'm sorry, guys. The market's moving because President Trump just jumped on Truth Social and had a very productive call with the president of Mexico yesterday. Likewise, met with the highest level of representatives in Japan. Also, a very productive meeting. Every nation, including China, wants to meet today. Italy too. So the dollar max has just cleared support, or it's about ready to clear support. Just FYI, guys. Sorry.
No, that's cool. All right. So the yen got a little pop out of it. I was looking at it. I see 2 drives. I'm waiting for next week to try along. So how are you gonna trade it, Ryan? Any idea, or are you the head of the central bank of Forex Analytics, and you you have 2 scenarios, but you're not going to forecast for 6 months? Huh?
If I was head of the central bank of Forex Analytics, I'll give you all the heads up on the moves before they happen, so you can front run it markets.
I was wondering if you might be able to turn the printer on. Anyway.
I think.
All right. So I don't know. The way it looks to me, and I know the news is going to shape it, would be maybe some type of ABC. I think that's also what Greg showed earlier in the week, a pullback to buy it again. But we could just blow, 117 if we get going here. 115 is a big number of years.
Yeah, I think if we get an ECB inspired dip, I think that's likely to get bought. So I'll probably look at that side if that happens, depending on what the dollar's doing elsewhere. On the flip side, if Lagarde says anything that causes a run spike to 115, then I'll be looking at that. as a potential hit that on the head, depending on what's said, obviously. So what's likely is we get nothing, and then we have to wait for the sources piece, and that'll probably move the markets more than Lagarde.
Okay. I'm going to turn it over to Stell, but before I do, I just want to give everyone a heads up. We have a possible 2-week reversal in energy. That means it closes over the Friday close from 2 weeks ago. And we're also on the verge of a false breakdown if we close here. So just a heads up on energy. Buy some oil shares. All right, Stell. You're up, man. You were on deck, and
all right,
step up to the plate. Here's the charts. I'm throwing you a curveball.
the generals have spoken. Time for the lowly soldier to come onto the stage. All right. So we have the ECB today. What do I think about the dollar and the euro? I think my main views remain. So I think the dollar's going to be heading lower along with yields. But this is a really nice area to be taking account trend long in the dollar. I mean, we hit that 61.8 retracement. We kind of took out the previous lows, but now right back above. So obviously taking along now before the ECB is gambling a little bit, so I wouldn't suggest you do that. But I think it's not a bad risk reward long. But my medium term view is for the dollar to be lower and yields to be lower because hey, this is what Trump has always said he wants. He said it before he got elected. He keeps saying it. Well, he hasn't said it recently, but he does want dollar lower and yields lower, and they tend to go hand in hand. And I think that's what's going to happen. So a bounce here is probably not a bad risk reward trade, but I would be looking to sell afterwards into bounces. So a dip in the euro dollar anywhere close to, if we get to the 112, which was this previous double top we had there, that would be really nice, I think, to try the other way. But for now, we wait for the ECB and see what they'd give us. So we're expected a cut, but inflation is still at 2.2. CPI 2.2, core CPI 2.4. So we're above target, but the new normal is for central banks to be cutting even as inflation is above target. So this is what I think about the dollar and the euro. Yields I still think are going lower. We had a really nasty move here, right? From a couple of weeks ago, big drop, then big spike, just everything happening. I think it took stops everywhere, left, right, and center. I still think that if we ignore this, well, you can't really ignore it, but take out this really weird move here, we're still in a kind of a channel which I think is going to break to the downside. Having said all that, look how nicely technically yields traded almost to the pip onto the fib level. So if the dollar drops and yields drop, what happens to stocks? Well, theory says that we go higher. But if the dollar drops and yields drop because things are really, really crappy, then you should expect stocks to follow. The problem is that with monetary supply expanding all the time everywhere, every dip will eventually get bought and every all-time high will eventually get broken. That's mathematics 101. So the question is, how good an entry can you get if you want to be long? This 4,800 was amazing. We talked about it here on Face. We talked about it in the chat room. We got touched, and then we're back above to this zone, which we had indicated earlier, and we're still here. So I think perversely, we might see stocks having another go towards 6,000. But one step at a time. Wait for the ECB. Meanwhile, gold is still trading supremely well. Yes, okay, it's down slightly today.
I just wanted to clarify something. I took a lot of heat for a while talking about 4,900 before the break at the time.
You were right.
well, I'm just saying that, I mean, I got all kinds of pushback from that. I mean, everyone was bullish. But you know what? I don't have as much confidence on the long side as I did on the short side. I flip back and forth all the time with what the market's doing right here. It's, I think, a tough call.
Well, it's a headline trade, right? You get a headline 1 minute, then another headline the other minute. It's a bit random, but and
Yeah,
we have to
just
admit
tough.
that this is not caused by some kind of macro factor, housing crisis or credit crisis. This is one man doing all this, and is the end result going to be positive for him and the U.S.? Maybe, but
Yeah,
he's driving everything at the moment.
yeah. Okay.
So yeah, I mean, you were right with that call, and we've been talking about
you
this.
remember when people were ready to take me to a mental institution?
Yeah, you're right on the door, weren't you?
Yeah, and I need, and I still may need to go.
But
Anyway,
by the way, we're about
yeah
3.5 minutes from the
okay.
ECB. Just
All right.
FYI.
Yeah,
All right,
sure.
well, why don't
Yeah, I'll take one more minute, then I'll pass it over to Blake to go
Okay,
through the data.
cool.
So gold still looking really resilient, really amazing. Gold to silver ratio 102, 103, which is incredible.
amazing.
It never
Yeah.
stays there, so we have to remember that. We've
You know,
broken
said
this
that
once.
Tavi Costa said that too. So you have good
Yeah.
backing. Never stays
Yeah.
there.
Yeah, I mean, we broke that once because it was COVID, but we never
Yeah.
stay there. So gold is going to underperform silver at some point. When is that? Who knows? But silver is trading a lot worse. Still in the middle of this channel. Not much more to say. I'll pass it over to Blake to go through the numbers.
It got rejected at 78.6. Whether that means anything or not in this environment, we'll see.
Yeah.
Today's
Let's
high
see.
in silver.
You know, Dale, going back to your comments about the S&P, I remember, we were all sitting there talking and, we're like, oh yeah, it looks like the market could roll over here and, we can, see a dip, below whatever we were looking at. And you're like 4,900. And I was like, dude, that's aggressive.
Yeah, it was.
I was like, yeah, that's a little like out there. Like, okay, we can see the market rolling over, but 4,900, come on. And then the shit came unglued.
Yeah.
How you did that? That's why people listen to the F.A.C.E show, guys. That's the reason why. Hey, listen, we have just like literally less than 2 minutes. Ryan, really quick, ECB, what are your thoughts? And then I'm gonna go to Kman real quick.
By the way, I've given you the screen so you can.
I've got it, buddy.
Okay.
Go to Kate because I've already given mine. So
okay, Kman, thoughts on the ECB and good morning, happy Thursday, happy
Hey, Kman.
Friday.
Hi guys. Well, I'm still leaning. It's not like a 90-10 or so, but I'm still leaning 60-40 for a cut. And then, like,
wait a second. There are analysts that think that we might get a half a basis point. So you're saying that there's a 40% chance that they're going to be on hold?
Yeah, because they still want to see what's going on. But I still think that they will cut. But it's less of a. I mean, yeah. I mean, okay, whatever. Because we only got 1 minute. I think 25 BP cut, and then they will go on firmly on wait and see mode to see what's going to happen over the tariffs. Because now they have like how many 80 or so days left of potential negotiations, and they won't act before the shit really hits the fan. And that's been repeated by most of the central banks up to now. If you listen to what the Bank of Canada said, Powell said yesterday, we've had the same kind of comments from already the RBNZ 10 days ago. So now we are watching what is going to happen next. But I do think still that they cut 25 now. Will it change much? I wouldn't say so in current scenario.
No, could you imagine if they went on hold? Like I said, there's a couple banks that are like, oh, they're going to give us 50. I'm with you. I think they're going to cut. But if they're hawkish like that, I was just going to say, oh, here we go.
Cut.
They cut. Okay.
Voila.
So we got the cut.
Trump called it too last night.
Yeah,
and he's using it against Powell.
He's definitely trolling. He's trolling.
No change in the statement as yet. All the same stuff. Not pre-committing, data dependent, meeting by meeting, determined to ensure inflation stabilizes.
Happy Easter from the ECB.
Right.
Yeah.
So what? But the comment is, or excuse me. Your comment, which sticks with me, Kman, is listening to the press conference and checking out Lagarde's tan and how deep of a dark brown she is. Might let us know if they want to stay on hold for a while. That would be construed as pretty hawkish because the market is still pricing in further rate cuts for the remainder of this year. Wouldn't you agree with that?
Yeah, but I mean, being on hold now doesn't mean no further rate cuts along the line. They just want to be ready to react if anything bad would happen really. And I think it would be quite logic that she says now we are in a wait and see mode to see what's going to happen on the tariffs, which has been said by virtually all the central bankers that we had to listen to so far, including Powell yesterday. So no, I think it's pretty logic, and you can't predict what the impact will be, and that's going to be the hard data telling us, but they will be ready. She's probably in the press conference now going to go from well, like Powell does, walk each side of the lines and then try to put her audience to sleep. So
yeah,
so talking about the tide and the weather, probably.
the good thing is, though, that Trump was right, and he's saying that the ECB will probably cut rates again. And the thing is, yesterday they said that they would be starting to look to replace Powell, right, at the end of his mandate. Imagine Lagarde taking over the Fed. They can go use the same tanning bed as Trump and Lagarde, the same fake tan spray. She doesn't need to do too much about her tan. I mean, wouldn't that be a great couple?
Oh, that would be a disgusting couple. That's like the things that I want to say dreams are made of, but nightmares are made of. Like, it's like I remember when I was a teenager and I walked in on my dad and mom, and that's like kind of seared in my mind forever. Now you've screwed me up with Trump and Lagarde. Now I'm grossed out. All right. So thank you, Kman. Really appreciate that. Did Stelios already leave? He said I think he had to bow out because he had his like chauffeur coming by, or
he always he talks and then he goes. That's what he does. It's like he takes the stage.
Yeah, right. I know. He's like he comes in like poo-poos and then leaves, like, and doesn't even leave us a quarter or anything. Anyway. All right, so let's talk about the remainder of the day. And actually, let me reference a couple of things. I was actually looking to pick up some Euro Swiss on a little bit further dip. Doesn't mean we can't do that today. I still think they're defending the 92 level. I think a lot of us are trying to play it to the long side. I haven't been long the last couple of days. I missed yesterday's move here, but just kind of looking at it today. But I don't know if you guys saw this. UNH is down 20% pre-market, and man, this stock has gotten walloped. You can see we're trading. I mean, this is the daily chart. We're trading down here right now. So even though the daily chart's not gonna pop up just yet, but that's gonna be one ugly ass candle. We do have Netflix at the end of the day, so don't forget about that. We do have weekly unemployment claims in a few minutes, and then I think after this ECB meeting, things are going to get kind of quiet as the market winds down. We were talking in the Forex Analytix chat room about the bond market closing a few hours early because of the long weekend. Yeah, so anyway,
what you're saying is then you're giving us permission to all go down the pub after the ECB, yeah?
Yeah, I mean, hell, I mean, what else are we gonna do? I mean, I think you're gonna be heading out to the pub, right?
I'm buying.
Yeah. Well, if Dale's buying, I'm flying over.
Yeah,
Dale's buying. All right. Hey, let's talk about some of the moves in the yen last night, because we saw the dollar yen make a hell of a recovery last night off of some trade representative comments. Ryan, what do you make out of those comments? A lot of people are hoping that the dollar yen has found a bottom here at the 88% retracement. You can see this is like the 88% retracement, but we're still consolidating below this channel support. What are your thoughts with the yen and what we saw out of the yen price action last night? Anything?
Yeah, it was moving in advance of, or when Trump said that he had good conversations with Japanese representatives, and then it seemed to reverse when those representatives said we're still a long way from a deal, pretty much, and we didn't talk about FX, and that's why we went all the way back up to 143s, and we had Ueda coming out, and he was, walking the fine line again, back to his usual self, reading from the hymn sheet. But it was interesting. We hit that 141.70 area. We did break through it a couple of times down to sort of 61, but largely it held 141.70, 142. That goes all the way back to when we had the big move up. So it's a significant level, and the fact we haven't managed to close below there is significant. But the bounce is looking a bit dead cattish at the moment. We're not looking like we're going to be rocking up to 147 anytime soon, unless there's a headline.
Yeah, I mean, Kman, I mean, we're well below, and I'll put it up here. I'll put the Ichimoku clouds, I mean, that are actually starting to roll over as a whole. I mean, how do you feel about the yen at this point in time? I mean, is this something that we should be looking to be buying dollar yen on, and all the yen pairs, or should we continue to stay like kind of looking for more downside? What do you think?
I'm actually thinking we can stick around, hang around here for a while until we know more about the negotiations. The Japanese said that they probably the same. No, sorry, they more or less said the same thing as that they've been saying over the past 10 years, that they are not driving the yen lower on purpose. If it comes to that, I wonder what the American reaction will be, and that would be weighing a bit on the yen. But for the rest, if they have like really good negotiations, I still think that the sell rallies is on the cards. But for now, I really think we are in that 141.5, 3/4 up to 144-ish range,
Okay, yeah, and it's a fairly, I mean, I guess we just keep an eye on that, and not really get too terribly excited about anything. And whoops, I didn't mean to do that. Not too terribly excited until we move out of. Damn it, I didn't mean to do that again.
Does anyone have a view on yields, and can someone tell me what they're going to do? Should I short bonds, or I mean, we bounced in bonds after holding major support. So I did just what you did, Blake. So I drew off that straight line break. I'm looking at retraces to sell into. Do you like that strategy?
Well, yeah, I think actually bonds are going to go down, yields are going to go up, and again,
Yeah.
I'm more curious to see if the dollar actually responds. I don't think this was a one-off. People are trying not to get too excited about that the fixed income reversal we saw like last week. People are, again, they're trying not to get too excited about it, because I was just talking to Tracy, and Shy Girl. Yesterday, I just did an interview with her, and basically, she's like, yeah, we got to see the hard data, so it's going to take us a few weeks to see it. But I don't think that's a one-off, and I think that this is pretty impulsive, so we got to be looking for another move lower. I thought when I saw it yesterday, I was like, oh, look, my thought process, and I even commented, I think, on Twitter. I'm not even sure if I did. Anyway, I was like, oh, look, we're breaking out to the upside in the bond market. That's a good thing, right? It's like, hey, you're seeing bonds move up, and the dollar wasn't the dollar wasn't responsive to that. We weren't seeing, this bond market move higher, yields go down, and the dollar wasn't cratering. So, that was good. In a sense, we weren't seeing that correlation. But at the same time, you look at it today and you're like, are we gonna, get much above here? I don't know. I don't have much of a view. Ryan, Kman, do you guys have any views there?
Well, I mean, we've been talking about this pushing and pulling between inflation and growth expectations. That's where your next move will probably come from. And I would say, in the end, if growth slows, it's going to have a bigger importance than if inflation flies. So I would still think, and I've been talking about it in the chat rooms as well. Give me another dump in bonds, and I'm going to start to be interested.
So you'd be interested like on a move like that. You'd be looking somewhere down here.
Yeah, oh yeah, 108, 107 is something levels that we have actually been talking about.
Yeah. All right. Ryan, do you have any thoughts here?
No, I can just echo what Kay said. Yeah,
You're thinking about pints.
Yeah, I'm eyeing the bar. That's why I'm looking in the fridge.
I know. It's like, seriously, I don't even know why I'm even asking you a question. You're already on holiday again. But okay, since you're going to echo the sentiment of Kman, then that's cool. Let's talk a little bit about really fast before we have weekly unemployment claims. You know, the euro's sitting perched up here at this 113.40 level where we're just consolidating above, just so everybody can see it. This trend line is from the 160 level to, you know, last week. We broke through the euro. It's tried to break back below 113 multiple times over the last few weeks. It has not been able to do it. Today we have Trump meeting with Italy's Meloni, and I was saying, just, you know, in the Forex Analytics chat room just a moment ago, and this is where, you know, you guys, these are the kind of conversations we're having. Just make sure you take advantage of the liberation offers so you can have these conversations with people that are like-minded. I was just like, I don't know where I wrote it. About we're going to have probably some pretty good headlines today from the Trump administration out of the White House regarding trade and Europe. Now, most people, especially Europeans, would probably disagree that she is the mouthpiece for the Eurozone. But that doesn't mean that we don't have a mouthpiece called the Trump administration that will be spouting off all sorts of, oh, things went really well with the Eurozone. They want to put together a deal. And it might not even be the Eurozone. It's just Italy, but it doesn't matter. You're going to get these positive comments more than likely because they're not going to put out negative comments regarding trade, not with the markets doing what they're doing, because we know the Trump administration is very sensitive to what the market is feeling right now. So positive comments from the meeting between Meloni and Trump. That's how I can kind of see things later this afternoon. How do currencies respond? Well, we've seen currencies have a positive response, especially like if you talk about the euro. You would see it having a positive response if negotiations are going well on trade. Do you guys see it any differently than that? Do you have any comments there, Ryan, Kman, Dale?
Yeah, I would. We were talking about euro early at the beginning of the show, and to me, I welcome this, and a pop in the Dixie may be back to par and a half to be a seller. So sell dollar strength on this dollar bounce, and then I think there's one more low blink. I know Jim thinks it's here. I have numbers in the 96 handle. So looking for a dollar bounce and then one more shot down into the 96 level, and that'll complete this whole first wave that we had from 102.
Well, 96 would be the rising trend line that takes us back on the dollar index. This goes over 10 years. So, actually October 2010, and that comes in right at 96 30s, which would also be a bear flag completion that we see on the daily chart. So
there's also equality from the last break we had from 110 on the weekly. It's equal.
Okay. All right. That
See
that
what
makes
all
sense.
the way
Here
left
to here.
Yeah.
So this to this.
Yeah.
It'd be a B, C, D. Yeah, that's right. I'm with you, Dale. So let's see if we see that. By the way, we have weekly unemployment claims.
We also have a guest too after that.
We do.
Yeah,
all right.
We have James. James is here. What a great day to have a gold guy with us.
He's going to be talking about gold. Well, since I got the euro on here, let's just look at I'm running out of time. I was going to take it over to the bond market, but here we go. Weekly unemployment claims should be coming out.
But very bad Fed manufacturing index.
Did I just
employment index dropping like a stone? Very negative new orders.
Oh. Wow, that is a nasty number. You're right,
Wow.
Kman. Wow. Okay.
And Euro's rallying on it.
Yeah, Euro's catching a little bit of a bid on that. And remember, we have the press conference in about 15 minutes, so don't get too excited about the euro. But the dollar, you see the dollar yen's dipping back below 142.50. So that's something else. And gold doesn't look like it's moving a whole lot. Futures aren't really taking notice of this at the moment. But man, that is a gross Philly Fed number. That's for sure. All right. Well, I know you do have an interview. Is he here? Did you find him?
James.
Oh,
yeah.
James is here. Good.
Yeah.
All right. Well, if you guys are precious metal people, then make sure you guys stick around because I mean, gold's been on a rampage, and I guess we need to hear from James to hear if he thinks that gold's going to stop or if it's going to reach this 3,500 level, which is the bull flag pattern, 261% extension move, and that's right here. There's your pennant, 3,500. Sure does seem possible, doesn't it, Dale?
Sure, everything is.
I know it's like anything's possible at this point in time with gold.
But I don't know. I think, I don't know. I can't chase I always miss parabolic.
I know. Don't you hate it when it like something goes parabolic? It's so hard to chase.
I specialize in making the tough money, the turns, and then I give the windfalls to everyone else.
I'm with you.
I'm generous,
We feel your pain.
I'm too jaded. I'm cynical of even my own work. Anyway.
Hey, before we go, I know James is here. I want to wish everybody a good Friday. Happy Easter for those of you that celebrate. Yeah. I guess Greek Easter or Orthodox Easter is actually the same weekend as Easter weekend for the Christian Easter, which is interesting. That usually doesn't happen. So happy Easter for everybody that does celebrate. Don't forget the liberation offer. I have to mention this. I forgot to mention this yesterday. This is all manual, meaning that if you guys take advantage of this offer, our systems, we kind of broke our billing system. So if you get charged like for 1 month $150 a month, just go check your statement, and if that happened, get with support. We have to manually do this. Everything is manually done. If you're a current subscriber, you have to go up to settings right over here and go to your and do it manually. We have to do it manually on our end if you don't. So, but don't worry, we're just kind of working through these billing issues. It's not anything. It's more of a we almost broke the system because we brought our prices down so cheap. So that's basically what it comes down to, in a nutshell. But look, people are locking in this price because $3 a day, you can be in the Forex Analytix chat room. Why wouldn't you take advantage of that? These are prices we haven't had in probably over 5 years. So take advantage of it. The liberation offer, learn more about it on forexanalytix.com. I'll see you guys in the chat room, and happy Easter, happy holiday, happy long weekend. If you're not celebrating, just have a great weekend. Thanks everyone.
And and happy Easter egg hunt, which is going to be a lot more expensive this year. So I believe everyone having one after they dye the eggs will not throw them out this year, but will eat the hard-boiled egg.
I always eat them. Who throws out their eggs?
People throw them out anyway.
Oh no, I make egg salad sandwiches.
I hope you find a few this weekend, Blake and Ryan and Kman, Stell. I hope you find.
I'm not chasing eggs. I'm not chasing eggs. I'm chasing bunnies this Easter. Happy Easter.
Playboy bunnies?
This is there's children watching.
Okay.
I'll leave that in the middle.
All right.
I thought he was going to put a bunny on his wife's behind and chase her around the house.
I forgot it was a G show. All right. Listen, Dream Team, thanks. Great work again. Feels like Friday. Have a great weekend, guys. Thanks for all you do for the community. And now I'm going to bring in James because I have some questions You know, James, welcome back.
Thanks for having me back.
Hey, buddy, my first question is, do you know who was behind the move of bringing all that gold back from the UK, from London? Who bought it?
Yeah, there's been a lot of assumptions on that. I ultimately think it was just hedge funds mainly, high net worth investors, family offices mainly that were doing that.
Okay.
I think that's mostly what it was in terms of pushing it to the States. I think there's a longer term agenda too. I think, you know, if you're gonna build the COMEX up and make it powerful, you need to have enough, you know, bullion and reserves to kind of make sure it's not a complete paper sham. And so you need to have a decent amount of bullion, and so that was a good excuse and smokescreen to do so. Yeah, I mean, the EFP just got so large as well. I mean, it was in the interest of doing that for traders to make some money. So, you know, shipping over planes of gold and you know, boating silver over or what have you, however they got the silver over. There was a lot to make, you know, to do that.
Yeah, well, I know in the silver that you know, during that recent rally, they didn't have the same type of physical to cover their shorts. They went to
London is getting down to very thin layers of float. I think the last estimate I saw was 148 million ounces. Yeah, which we don't know of that what is actually available depending on where the, you know, arbitrage is, who would be willing to lend it out at what lease rates, you know. That
okay, so where are lease rates with the markets doing very well, especially gold lease rates still very high?
I think the silver ones are still kind of high. I don't think the gold ones are that high. I think it's kind of died down. So I don't think the movement is happening so much on the gold and even the silver side at the moment. We're if anything, threatening to go into backwardation. That would be the concern I would have, is it reverses.
In silver and gold, or
eventually, you know, in both. You know, that's ultimately when you get to a place where gold's in backwardation, Jack. You're in real trouble. That means you know, I don't care where it's dated at. I want the gold now, and that's a scary place.
Okay, it feels scary now.
Well, I mean, I think people have got to get through their minds that $3,300 gold is actually still going to be cheap in the end. So, I mean, it, you know, not on a short term basis. I wouldn't say like get long and trade it at 3,500, you know, because it could go there in the short term.
Right.
But I mean, in the longer term, in terms of, let's talk at 2035, where's gold? You know, I mean, I'm talking, you know, 2030, where's gold? I mean, we have.
When's the U.S. going to revalue its gold so they could sell more bonds?
I think, well, to sell more bonds, I think the combination right now, right, is forcing, you know, countries in our privy, under our sphere of influence, to eat on 100-year duration, and I'm sure they won't resent that. And then inevitably, you know, they're going to also use stable coins. They're trying to use that Ponzi scheme to, you know, help finance the rollover of the Treasury bonds and bills. And then as well, they're, you know, eventually they're going to mandate U.S. citizens do it, you know, and banks. You know, they're going to tell banks you have to carry a certain percentage on your books in U.S. Treasury bills and bonds. And if you can't survive, then consolidate further. You know, that basically is a long-term road I think we're headed towards.
Okay.
So the CBDC ultimately is not coming, but it'll be a stablecoin market, I think, is where we're.
Okay, so you know, what is a stable coin in an unstable world?
Sure. It's this thing called Tether or USDC. You know, there's all these different ones, and no one audits them. No one knows truly what's going on in their books. So it's really a scary place. I wouldn't necessarily. I mean, they'll last because they're intertwined now in the Ponzi. But you know, they'll last as long as the Ponzi lasts, I suppose. But ultimately, the dollar has to run its course in terms of being devalued nominally, so we can pay off all the things coming due in terms of debt and unfunded liabilities. So
where would that be? Another they have to cut it in half from here to 50?
Much larger, I would think. I would think when it's all said and done. I mean, if you look out 10, 15 years, I mean, you're talking another 90 some odd percent going down in terms of the dollar's purchasing power versus gold or what have you, you know, versus anything of real value. So
it's kind of amazing though, the shift we've had in 3 months, because up here when the dollar was here, everyone was talking about under parity in euro right here. and no one thought the euro could rally. Now the boat, it's kind of on the other side.
Right.
I still think the dollar's head lower. But I think there could be something around 96 for a bounce. Maybe that
what you guys showed, what you showed made sense. It definitely made sense.
Yeah, so it's going, it's like it was. It's a reverse or inverse of what it was. So, how about this gold silver ratio? Are we distributing here? It looks like we're trying to top out, unless we're not out of, I guess, crash mode. In the S&Ps.
Yeah, that is a question. Is this the top? The 105 number that's in line with the peak in 1991, which is 106.
Yeah, it was the other year it did that. Okay.
Yeah. So if you go back and look really on a long-term chart, I mean, 106, and then you had the COVID 125, 126 top. What generally happens when it does that and it peaks above 100 is that about 4 to 5, 6 months later, it substantially falls. Right.
Yeah.
And so the question being is, are we going into like a huge recession with a big D, in terms of deflation? Are we going to have banks start failing? We're going to have, liquidity just completely dry up. And then the gold silver ratio could go even higher than COVID, and that's how silly it could get. But at that point, you're going to have a huge divergence between bullion you can actually get versus whatever they tell you gold and silver are worth on a digital page.
Okay, so here's Bank of America. So I know because you bring it up, you pay attention to it. Where are you keeping or telling clients to keep their liquid cash? Do you know safe banks or maybe that's an oxymoron, safe and a bank? What do you tell them to do? Go out and buy T-bills, or do you look for a safe bank to,
in the credit unions, places that don't have derivatives on their books, don't have more than 250,000 and per account, split it up amongst family members if you have to, in order to keep it all in one place.
Okay.
But definitely don't go beyond the FDIC limit. Treasury bills is a place you can hide for a while. Short-term bills. These are all options, of course.
Will there be bail-ins though? I mean, everyone feels pretty comfortable about, if it's under 250, I don't have to worry. But could there be a bail-in, and then it doesn't matter?
Yeah, that's
if it's insured.
Yeah, that's a real threat in the sense that the G20 has signed on to that type of supranational law. And so if you have the ultimate concern, the domino effect of the derivative market imploding, and then you have all these banks going down, unsecured creditor you are if you have anything in a bank. And the FDIC's got your back, but how long will it take to get refunded? How long will it take to get everything fixed up? I don't know. I mean, I had to run out of my bank during the Silicon Valley bank run era, those 5 or 6 banks that failed. I had currency in the Pacific Western Bank, and I had ACH run out of that thing into a credit union I now use. And so, I mean, it is a real threat. It's a concern. I wouldn't have a lot sitting with any of the major derivative houses. I mean, I guess you could take the other view and be like, well, JP Morgan's not going anywhere because they're just too big to fail. So that's a safe place. Yeah. There's a lot of people who believe that. So, and I understand JP Morgan has a lot of nice features and bells and whistles. So I can see why people like it, using that bank.
I like Jamie Dimon's timing for selling his stock. How about you? I mean, I was told it was done automatically, but that's why people pay attention to insider sales.
Of course.
And there's no bigger insider than Jamie Dimon, right?
Yeah, I mean, if you have purview into 40% of the banking establishment, and you can kind of see what's happening behind the scenes in real time, you would have a lot of information well ahead of the market. So for him to be moving off in such large size and all that stuff, it's not surprising. I mean, he's.
You think he has inside information?
I mean, and he has.
I'm kidding.
It's like,
but he has some inside information on JP Morgan, but he actually did sell millions of shares at this high right here.
Well, good for him.
Yeah. Anyway, pretty good sell-off. Let me ask you this. Most people are giving it's been a, 20% in S&Ps, and I know this isn't exactly your bailiwick, but I know you follow it. Almost 30-40% in NASDAQ. Do you think that this market could be manipulated up through just, trade deals coming in for the next 90 days, and we could still make a new high in the S&Ps?
A new nominal high is
yeah.
possible in the sense that they could start doing, QE and start, creating currency out of thin air, and you could literally have a new nominal high. The issue is, in that scenario, I still think gold is going to be outdoing it. If you look at like a long-term, gold and S&P chart, it's rolling over. It's looking like the rollover from the Nifty 50s, the 1960s stock bubble. I mean, it's gone down, bleeding precipitously to like 1.59 now. So it just keeps going lower. And it just tells me that, we're going back to 1-to-1, no matter what they do. You might have a nice nominal number looking in the S&P 500, and I think they have to do that. I think they have to do that not to scare people out. And the mechanics of passive investing, when that starts to sell, you get real waterfall effect. So you have to keep people kind of hemmed into the biggest market that the U.S. has, which is the stock market. So I think that it's very important for them to not only not let it crash.
Okay, so we'll see what unfolds there over the next 90 days. Do you have any color or insight into what people were trying to describe last week in the bond market, that despite great inflation news and everything, the bonds still sold off when the market was under pressure. The day after, there was no flight to quality. What are you hearing about Treasuries?
Yeah, so I hear the scuttlebutt that China was selling, Japan is selling. Those are the two big rumors in the market, and you even seen Bloomberg terminals saying such. In terms of like small little articles and blurbs talking about how they're doing it to support the yuan. I mean, China, I'm sure at some point is going to devalue the yuan. That peg has been artificially there for so long. I mean, I would imagine that's going much higher in time, because they, if you look at the M2 currency supply in China, it's just going up a wall. So they have a real problem internally. So it wouldn't surprise me at all to see the yuan devalue.
Is China in enough trouble to cave if Trump gives them the ability to save face?
I think they have the manufacturing power base, right? Like they have the ability to make the stuff, and we really don't. So I think they have a lot more leverage than Trump gives on. I think Trump is more smoke and mirrors and bluster versus what China's ready to do. China's ready to go at it. I mean, they burned the bridge. I mean, they're going for it. They're not turning around.
Well, then, I advise everyone to get at least 3 months of their medications. To have in store in case they play that card, because I think it's like 80-90% of our pharmaceuticals.
If COVID didn't teach you that, then you didn't learn the lesson. I mean, you have to have most important things in stockpile. That's important. Like I know it at SD Bullion, we have a complete warehouse there just built for packaging alone, just for boxes, right?
Wow.
I mean, we can't have a situation where we can't get boxing. That's like, it's critical to our business. So we saw the writing on the wall a long time ago and built out planning, looking out in case
so you guys are going to be doing that. So your whole supply chain of shipping metals to people, that has to change because of this?
Not in the sense of the only way it's changed is a sense of, well, what could fail, and so we have to plan around that and build stockpiles in order for it not to, right? So we have to have boxing, we have to have room to stack that stuff, and also use it as leverage to get it at a cheaper price when we buy it in huge volumes. So
what do you think is going to happen to the metals when crude rallies back to $80 or so on maybe possible military action by Israel that we back against Iran?
The one thing is, if you have the gold and crude oil ratios rising so high and vertical that it's hard to think it's not going to keep going on there. I think we're moving to a world where gold is going to start more or less being the numeraire for oil, and so you could have crude oil go higher, but I think in that case, you also have gold going higher.
Okay, so they both, it gives another, it's another afterburner. Okay,
I mean,
so
I just don't. When you look at like this really long-term chart I have, I mean, it's a couple hundred years, and there's like 4 eras, 5 eras where gold just goes into a huge premium.
You want to show that?
Yeah, I can show it to you in a second.
All right. Yeah,
let me find
be interesting to see.
Yeah,
and we could wrap it with that.
Yeah,
we're very vulnerable to China. We know that.
Yeah.
I mean, it's good. It's going to take at least 5 years to 10 years to reshore everything.
Yeah.
If we can, if we're still around.
1 second. This is I'm on Nick Lark's chart, and it's a damn mess always.
Okay.
Give me 1 minute to find it.
That's okay if you can't.
Yeah. Hold on. I might be able to find it in my Twitter.
I love those macro charts.
Yeah, they're great. Definitely great.
So are you glad to be back in the States now with all this stuff happening, bro?
I mean,
you were up there. Nothing could touch you where you were, except the volcano. Huh?
Well, I looked around there, and I know that internally, I kind of understood after living there for a while, they had their problems too. And if problems get bad enough, then I'm just, gringo whitey, and I become a target too. So,
okay. I tell you what, especially not being an American now. That's another good point.
You can be blamed or scapegoated for virtually anything, right? If we have a dollar, situation where things go real wrong, and all of a sudden they start pointing at me like it's my fault. So you have to be careful of that.
Yeah, it's already like that in Mexico.
So I found it here. Let me see if I can share my screen here.
Okay, I see your.
Can you see my screen?
I don't see the chart yet.
Okay, let me pull up my screen here.
There it is. Crude versus gold.
Yeah. Let me try and get bigger.
So everyone, while James is doing this, follow him because he posts stuff like this at James Henry and A-N-D.
So you see, like on the long term, we're spiking over 40, and every time that's happened, I mean, you go through mega spikes. You go through eras, and this is back in the Great Depression. This is back in the golden age that Trump loves. This is COVID. You have a situation now where it looks like, well, the system's changing or something's going on radical. And so the idea that crude oil is going to outperform gold, I don't see that now that we've gone on this mega run vertical. I think things are really changing underneath.
Yeah, I agree with you.
Yeah, and so that's the point. It's like
I'm just looking for like a counter trend. It's very underowned right now, oil.
Yeah,
you look at hardly anyone's long on the specs on the CFTC commitment of traders. It's gone nowhere. It's been quiet. It had a breakdown that didn't work. So that's enough for me to try it.
Is everyone thinking, the Trump administration wants oil cheap right now? Or are they thinking, that's...
Yeah, that's it too. So, that's another reason not for people to have that sentiment. But when you think about it, the oil companies don't want to drill because prices are too cheap. It would almost be, even though people will complain about it, if he wants oil companies to drill, he needs to get prices up for them to and them to believe they're going to stay up for a while to get drill. They're not going to do it down here.
Right.
Anyway, really great to talk to you, buddy.
Yeah.
And guys, if you you're interested in having physical and adding on dips and building and stacking, consider giving James a call. Maybe contact him through his X account and your spreads. Let me ask you this: has retail been going crazy over the last month or so? Has it been real busy for you?
It has gotten, in there's been random spikes depending on if we, for instance, when gold went below 3,000, silver went below 30, there was a large volume of buying. Those are the more of the more intelligent, longer term stackers. But then also there's the FOMO trade. Like yesterday with gold floating higher, there was a lot of influx of buying because people thought it was running away from them. So we have it both ways. And you know, ultimately, if you're in this market and you're looking to get positioned, I think you got to wait for this interim top for gold, and then the revisit back down, I think, is coming for the 200-day. I think we're going to have one more dip below 3,000 for it. So maybe this summer
too, James.
up. Yeah,
2,700 or so.
Yep, I think so. And that is usually the sign. When that happens and it bounces and then we go beyond 3,000, we're probably not going back again. And then you at that point as well, and historically the gold silver ratio starts tightening. So we probably have one more deflationary thing that's going to occur here, and we may go higher in the gold silver ratio, but that will be the final spike, and then we'll probably roll over and
are people complaining? The silver longs, you know, I should have gotten out at 37 or
the manic depression is amazing. You know, depending on the day, it depends on, you know, whether or not they're in manic mode or they're in depression mode. And you know, the gold silver ratio above 100 generally means we're in depression mode. Once it starts to roll over, then they'll get real annoying on X and go into manic mode. So
you know what, I found one stat that you would find amazing. Because I know how you feel about miners. They've had a pretty good run, but the silver, not the gold miners, the silver miners index is beginning to has turned just like gold did against the Dow and other indices a while ago. The silver miners have turned against stocks.
Recently there has been a good pop, and you know, I mean, on this long-term chart there are always a couple, you know, durations. Seriously, in like the last 18 years there's been 3 of them and they've lasted a combined 3 years roughly, when you add up miners and gold outperforming gold bullion, and then for the 15 other years they've not. And I think ultimately you'll so like sorry, I mean, you
last March was good, but you know, anyway, the bounce they had from the crash low on many of these, James, have been huge. But I think there's one hurrah left in the miners if we can have a melt up with with the Fed pumping and take the S&Ps to 7,000. These silver miners are going to be the top performers.
I agree. You need to, if you're going to be in that game, you know, have a certain percentage of it in there, swing trade it and scalp it and take.
Well, you know how much I like leverage, bro. I find 3-time levered ETFs on different assets and instruments.
ADQ and silver is a good one.
And then I buy options on those.
That's even more degenerate. I like it.
All right, buddy. Have a great Easter, James. I'll be talking to you this summer. Some real great looks. Everyone follow James. If you're, I mean, you got and how he can just, you know, give you the answers and make you think about what you might be getting emotional about, like silver stocks, and you know how people have suffered with it. That's why I think that they're going to go, because I think people have surrendered. Even gold and silver bulls hate the miners. So anyway, James, have a great weekend. You were right. The Masters was hard to chill during the Masters, especially
that was a good roller coaster ride, man. That was
fun. Know, it reminded me of my trading.
Yep.
Rory's last round. All right, my friend. Follow James Henry Anderson at James Henry and check out his spreads and what he's doing for your physical purchases. And that's a wrap, everyone. Don't just count your coins and your bars and, you know, whatever else it comes in. Count your blessings. Thank you, James. There's SPX and XAL. Okay.
Yeah. I mean, it's good talking to you, Dale. Thanks for having me.
Yeah. All right, James. That's a wrap, everyone. Have a good Easter. Remember, you know, you too can have a resurrection in your career. Okay. In fact, if you don't believe that, because you're going to have to get off the mat, all the greats blew out. So It's called perseverance. And I'm still persevering. So you guys could do it too. All right. Have a great weekend, Warriors. Adios. Thanks again, James.